Let's talk about stacking industrial metals, copper and nickel. What's the best type of copper and nickel bullion to stack, how you can get the most weight of bullion for your money, and what the supply, the demand, and the price is going to look like for these metals moving forward. Now, earlier this year, we saw the price for both copper and nickel spike up in a very significant way. They have corrected a bit from there, but now we are seeing the prices start to tick up again. And I think that right now is a good time to seriously take a look at stacking some of the physical industrial base metals because the prices are not likely to stay as low as they are for long. And right now, I do think that this is a huge opportunity for stackers because you can actually get these metals right now pretty easily below their melt value, like well below. So this is something that we should all be taking a look at. And we've also got industry insiders warning of shortages developing in the near future. We're going to get into all of that in today's video, so stick around. Hey everybody, Smart Silver Stacker here. Thanks for tuning into today's video. I hope you enjoy it and you get some value from it. If you do, please give it a big thumbs up down below. And today's video is brought to you by SD Bullion, so don't forget to check them out with the link down in the description. So why stack copper and nickel anyway? Well, the big reason is that both of these metals are going to be essential for the transition away from fossil fuels and towards renewable energy. Now, if you're like me, you might be a little skeptical about that transition in the first place, but that doesn't mean that the powers that be are not going to try it. And in order to build a green energy infrastructure, a tremendous amount of copper and nickel are both going to be needed. Copper for the electronics, the charging stations, the power transmission lines, you name it, if electricity is involved, so is copper. And nickel is actually a key component in the cathode of lithium-ion batteries. In fact, it's such an important component that last year Elon Musk tweeted that nickel was his biggest concern in battery production. And he also mentioned that for standard range vehicles, Tesla had shifted some of their batteries to an iron cathode, but the problem is that those iron batteries, they don't have the same range. So even if some alternatives like iron help to blunt the demand for nickel, a lot of it is still going to be used in producing batteries for electric vehicles and devices like the Tesla Powerwall because it is the superior material. And the supply may not be able to keep up with all of this additional demand for these metals. In October, Bloomberg reported that the copper market is facing long-term shortages. Mike Henry, the CEO of BHP Group, warned of a mismatch between the timing of increase in demand and when supply meets that demand. And according to Henry, the copper market will be in a state of slight oversupply for the next couple years, but towards the end of the decade, the supply is going to tighten up quite a bit and we may see shortages as more easily accessible seams of copper become increasingly difficult to locate for miners. And at that same conference, Costa Bintis, the co-head of metals and minerals trading at Trafigura Group, said that the energy transition and tight supplies will drive a rebound in copper prices, with stockpiles set to shrink to less than 3 days of global consumption by the end of this year. But at the same time, a shortage of copper is not guaranteed by any means. Just take a look at this article from Fortune published a couple days ago titled, "The Mining Industry Can't Ignore a Startup Solution to a Decades-Old Copper Problem. The Potential is Enormous." This article is about a startup company. The name of the company is Jetty, and they're working on a new technique to refine a previously unused form of copper ore. And right now, all that ore is just sitting in waste piles. Now, these are low-purity sulfide copper ores, and they have a non-reactive coating on them that prevents the copper from being refined using current techniques. But this company, Jetty, they have developed a specialized catalyst to disrupt the layer, and that's going to allow rock-eating microbes to go to work at releasing the trapped copper. And BHP also happens to be an investor in this company, and they have spent months setting up a trial plant at their Escondida mine in Chile. And Freeport-McMoRan's, another big mining company, they have actually begun implementing this new technology at an Arizona mine this year, And Rio Tinto, another large mining company, they're working on devising a similar competing process. And right now, all of that waste ore has just been accumulating, like I said, in big waste piles, and it's estimated that there's 43 million tons of copper that might get processed with this new technique. And that's more than $2 trillion worth of copper at today's prices. So, two things I think you can take away from this story. The first one is that if this works, and it works at a low enough cost to be profitable, and that's kind of the bigger of the two ifs really, then a copper shortage will be averted. The second takeaway, though, is that the prospect of future copper shortages is very real, and that is the motivating factor for these miners to be investing in and developing new technology like this. So, is there going to be a copper shortage moving forward? Well, kind of a maybe at this point, but one thing is for sure, there's going to be a lot of demand for the metal. The question really is, will the supply be able to grow to meet that demand? And that's the tricky thing about shortages in general. They can be tough to forecast because sometimes, you really do have them and prices for a commodity can spike up in a big way. Just look at what happened to the price of rhodium over the past few years. It went from under $1,000 to a high of, I think it touched $30,000. So that's what can happen when the supply of a commodity is constricted and demand rises. And when the supply of a commodity is very hard to grow, you don't need a huge increase in demand to move the needle on the price. You might only need a 50% increase in demand to get something like a 30x increase in price if the supply cannot grow to meet that demand. Now, these are not real figures. I'm just saying that as an example. But the point is that when a product is in short supply, the price will move up as high as it needs to in order to meet market equilibrium to make sure that that scarce resource is being put to its best use with the limited quantity available. And it's a nice built-in feature of the free market's price-setting mechanism. It ensures that scarce resources go to their best and most efficient use, which is reflected by who can pay the higher price for the commodity and still be adding value to the economy with whatever activity they're engaging in. Now, the flip side of that coin is that sometimes supply is expanded because of the higher demand. Demand goes up, prices begin to move higher, and then at that higher price, some new form of production, like leaching copper waste with a new chemical catalyst, becomes viable because the cost to develop and implement it is offset by the profits gained at the higher prices. But here's the thing. Even if we don't get a copper shortage, copper is still very attractive for stackers because one, it's an inflation hedge. Even if copper doesn't get squeezed and we don't see a massive spike up in prices, inflation is going to continue to drive the price of tangible commodities like copper higher for the foreseeable future. And you don't have to take my word for it about inflation. Fed Vice Chair Lael Brainerd issued a similar warning 2 days ago in a speech delivered at the 21st BIS annual conference in Basel, Switzerland. And she said, inflation in the United States and many countries around the world is very high. While both demand and supply are contributing to high inflation, it is the relative inelasticity of supply in key sectors that most clearly distinguishes the pandemic and war-affected period of the past 3 years from the preceding 30 years of great moderation. Interestingly, inflation is broadly higher throughout much of the global economy, and even jurisdictions that began raising rates forcefully in 2021 have not stemmed the global inflationary tide. And inelastic supply, that's what we were just discussing, when supply cannot expand to meet rising demand. And likely this will be a catalyst for much higher commodity prices in the coming years. Of course, Lael Brainerd, the central banker, she wants to ignore all of the demand that was created by the vast quantities of dollars that were printed and distributed, and also wants to blame the inelastic supply on the war rather than on the war-related sanctions, which are the real culprit. But, nonetheless, as far as inflation remaining a persistent threat, I think she got that part right. And the other reason that copper is so great to stack right now is because it's very easy to stack it way below the spot price. If we take a look at coinflation.com, based on today's metal prices, we can see that pre-1982 copper pennies like this, they have a melt value of almost 2.5 cents. And a quick search on eBay reveals that these coins actually regularly sell for more than twice their face value. And a nickel has a melt value of over 6 cents. It's actually worth more than 125% of its face value. And Coinflation, for some reason, it says the years 1946 to 2014 for the nickels. I think that's probably just because the last time the site was updated was in 2014. But the nickels that they mint today, they still have this melt value. So they're still making these copper and nickel coins. And, nickels, by the way, they are 75% copper and only 25% nickel. So that melt value is not just for the copper, it is for the combined metal content of the coins. But I mean, nickel is a great metal to have too. It was just earlier this year that we saw a massive short squeeze in the nickel market when nickel prices rose more than 230% in one trading session. Now, the LBMA, they squashed that rally by halting trading, and they saved their billionaire buddy, the nickel magnate who had the massive short position, and they punished the people who had the long paper contracts. But first of all, that's a trick that they can only pull off so many times. If they do that again, they're going to lose all of their credibility. And right now, they're actually defending that action. But I think anybody who's paying attention understands that when they halted the market like that to save their pal, that just revealed how corrupt these paper markets are. And I think that story also is an excellent example of how, when the Schumer hits the fan in the economy, you need to be holding physical assets, not paper ones, whether that be gold, silver, copper, nickel, or any other metal. If you don't hold it, you don't own it, as the old adage goes, and also as those paper longs in the nickel market found out earlier this year. But the great thing about US nickels is that they let you hold these base metals in physical form. And right now, you can easily buy them below spot price. And it's a little bit different with the pennies. With pre-1982 pennies, you got to buy a box of pennies and then sort through it and save all the copper ones, and it's really not necessarily worth your time. I mean, it's kind of fun if you like doing that, but it is fairly time intensive. But with nickels, you can just go to the bank and buy a $100 box of nickels right now. And as soon as you do that, you're holding about $125 worth of copper and nickel in your hands. Now, at some point, I don't know when this is going to happen, but at some point, these coins are not going to be minted any longer. They stopped making copper pennies 40 years ago. They replaced them with zinc, and nickels will probably be the next thing on the chopping block as inflation continues to drive the price and the value of the metals in these coins higher. I mean, right now, it's costing the mint money to make them. They're not getting any seigniorage. They're not getting any payoff. It's costing them 6 cents worth of metal to mint a 5-cent coin. And when that happens, when they stop minting US nickels, there's going to be an active market for these coins, just like there is right now for copper pennies. And it might even be as early as next year. If they roll out a CBDC digital dollar, then I would expect all cash to be phased out in relatively short order, probably starting with nickels. And with nickel, it's much the same story as copper. Right now, nickel is primarily used in the production of stainless steel, but as a green shift in the economy occurs, more and more of this metal is going to be needed for the production of batteries. I mean, the percentage is already on the rise, and that's a trend that is going to continue. And I know I mentioned Elon Musk tweeting about that earlier. I also heard him on a podcast. I think it was on one of his appearances on the Joe Rogan podcast, and he talked about how there's going to be shortages of nickel as they start making all of these batteries. It's going to be in scarce supply, and there's going to be a lot of competition to secure the dwindling physical supply of the metal. And unless we can come up with a way to grow the supply, that dynamic is likely to drive the price for this metal much higher. Now, consider also that Russia is the third largest producer of nickel worldwide. They're responsible for more than 11% of total production. And BRICS members Brazil and China are also on the list of the top 10 producers. And finally, Indonesia, they're the world's top producer. They churn out over 30% of global production of nickel. They are rumored to be considering membership in the BRICS organization. Now, this headline here is from Russian news agency TASS, so, take it with a grain of salt, but still, Indonesia is at least considering putting in a bid to join BRICS, and you can see that the possibility for the supply of nickel to get, let's call it a little bit tight, especially here in the West, that's a very real threat. Now, let's say you don't want any copper at all. You don't want the 75% copper composition here, and you want more of a pure physical nickel play. Well, one thing you might want to take a look at is these Canadian nickels minted from 1955 to 1981. Now, these are pure 99.9% nickel bullion. And at today's prices, each one of these coins has a melt value of just under 12 cents. Now, if you live in Canada, I guess you could sort these coins out of your pocket change. I'm not sure how many are actually still in circulation up there. If you're watching and you're in Canada, leave us a comment. Let us know if you ever find those in your pocket change. But if you're in the US, there is an active market for these coins on eBay as well. You can see that this lot here just sold for $79.56 when you include shipping, and that comes out to almost 16 cents per coin. So yeah, that is a markup over the melt value, but it's probably less of a markup than on any other form of pure nickel bullion that you're going to find. And look, I'm not suggesting that you go out and buy a bunch of these coins on eBay or any coins for that matter. None of this is financial advice. I'm just sharing with you some information. But one thing I think you don't really need to worry about, when you buy coins on eBay, a lot of times with gold and silver, counterfeits are a big concern. But I don't think that that's going to be as much of an issue with coins like this because, let's face it, counterfeiting nickel bullion coins would be prohibitively expensive and probably not worth anybody's time. So at least you can probably have a little bit more safety when you're purchasing from smaller buyers. Now, again, not financial advice. Always do your own research into who you're buying from and all those things. Do your own due diligence. But that's just a thought I had. And finally, if you're stacking industrial metals, if you're stacking nickel and copper, one of the things you want to avoid is other forms of bullion, like copper bars, copper rounds, nickel bullion bars. I stay away from all of those. And yes, I do have this one big copper bar, which, is very cool, and I think it's fine to have one for fun. But understand that with all of these forms of bullion, you're going to be paying an enormous markup over the actual melt value. So when it comes to stacking and not collecting, you'll get far more weight with the coins I just told you about. Old US pennies, US nickels, and even Canadian nickels. And with all of those coins, you have the added advantage that they're legal tender. Nickels, for example, if you buy a $100 box, even if the price of nickel and copper go to zero, you've lost nothing because you still have $100 worth of currency, which is the same thing that you paid for them. So the risk really is very low with these coins. Now, some people will point out that you can't legally melt down any of these coins. And I'm not really sure if that applies to Canadian nickels, but US nickels and pennies are actually illegal to melt. It was a rule that was enacted back in 2007, but that's really not a problem as demonstrated by the fact that there is a ready market for US copper pennies despite that restriction. And also, if we ever go cashless or let's say the price of the metal spike up in a big way, my forecast is that Congress would probably lift that restriction in an attempt to try to help bring the prices of the metals back down. So what are you stacking as far as industrial metals go? Does anybody else out there have boxes of nickels? Leave me a comment down below to let me know. Thanks for watching, everyone. Stay safe and happy stacking. Smart Silver Stacker, out.